With the market so oversold, it's finally time to buy the dip, and financial pros have been looking at ETFs that mirror the S&P 500. The Vanguard S&P 500 ETF, also known as the VOO, is one of them, and it's the second most popular search by financial pros on Trackstar over the last month, only behind the ever-popular SPDR for S&P 500 ETF Trust, that's known as the SPY. Now you might assume that the most S&P 500 ETFs are the same. How hard can it be to copy and paste a simple formula after all? Well, let's find out. Investors regard the S&P 500 index as the best barometer for the overall stock market. It represents 503 of the largest US companies, and yes, the S&P 500 has more than 500 names in it. VOO invests in stocks in this index and is highly diversified, with exposure to many different sectors. And the top 3 stocks in VOO represent more than 15% of the ETF's weighting. Large cap tech makes up a huge portion of the index, which is why investors look to Apple, Amazon and the like as proxies for the overall market. And VOO's been around since September 2010, and if you invested $10,000 in it 5 or 10 years ago, you'd be sat on some incredible returns. And in terms of alternatives, you won't be surprised to find that VOO isn't the only show in town. And in terms of portfolios, they're all fairly similar, aside from Schwab's US Large Cap ETF, which tracks a different index but has a similar top 10 makeup. And these funds broadly charge similar fees, but there's a bit more competition when it comes to dividends. In terms of returns over the past 5 years, VOO is the best performer. Just. In our opinion, this is a 10 out of 10 ranking ETF, and that's because it's made by a great ETF company, Vanguard. You simply can't go wrong with low-cost ETFs. If you're a multi-year, long-term investor, check with your broker for similar mutual funds with even lower fees.